This video is sponsored by my Patreon. Check the link down below or go to stocksurfest.com/Patreon and join. You get all my buy, sells, call outs, morning update videos, plus more. Check the link down below. Join now. Let's get into the video. Alrighty, guys. So it does seem like we're going to have another red day in the stock market today. It's currently 3:45 p.m. on the East Coast, and we have the S&P 500 down 0.6%. We have the Dow Jones down a whopping 0.8%, and we have the Russell down 1% as the NASDAQ is down 0.4% with the VIX up over 7%. So in this video, we got to break it down. We have to break down some stocks, some charts, my thoughts on the market. So sit back, relax, hit that like button, subscribe, get your 2 stocks from Webull and your $50 from M1 Finance, link down below, and let's get right into the video. So like I said, the markets are down right now, but the crazy thing is they're not down nearly as much as they were earlier in the day. If you guys take a look here, the markets today have been very volatile. I'm talking very freaking volatile. Look, SPY pre-market was sitting at 466, and then, and by the way, that was at what, 5:15 a.m. on the East Coast, and then by the time it hit 10:50 a.m., so 5.5 hours later, SPY has dropped from 466 all the way down to 456. And now that I'm looking at it, earlier in the pre-market, SPY was almost at 468. So we dropped $12 from pre-market to the low of the day. And look what happened after that. We ended up getting a ridiculous relief rally from 456. And now you guys can see we're about to close in 10-15 minutes. SPY is going to close anywhere from 463 to probably 464. So we dropped $12 in the morning. Now we're actually recovering a lot of that loss, so it seems like we are seeing that relief rally. And let me show you guys the 20-day chart. The 20-day chart shows just that, a relief rally. This is not a reversal quite yet. We're not breaking out of the moving averages. In fact, we're under the moving averages on the 20-day chart, which means this could be a bull trap. And on the 10-day chart, we're under both moving averages. And on the 5-day chart, we're now just peaking above the 180 SMA, but still the bears are dominating. So that's SPY. Let's see what's going on with Triple Q. Triple Q right now is also at a very big resistance on this 5-day chart, which is right around 380. You guys can see 380 is what we held as support a couple of days ago. Once that broke, it became resistance. Hence why I'm saying now that we're at a 360 or a 378 rather, 380 Triple Q, we're at resistance, right? So in the short term, this needs to break 380, but I'm not too convinced quite yet that it's going to do that, because on the 10-day chart, this looks like it's being dominated by the bears, right? We're under both moving averages. And on the 20-day chart for Triple Q, it's clear to me that this is just a relief rally. We could be seeing more downside as of now. So there's a lot going on in the markets, guys. We are noticing the continuation of the rotation into value. And you guys can tell, I mean, if you haven't been able to tell, I don't know what to tell you unless you've been living under a rock for the past couple of weeks. It's been a couple of months, actually. You know, if you've been watching the markets, you know that growth stocks have been getting hit, and a lot of the value, the safer stocks, have been doing well. Just today alone, guys, take a look at Bristol Myers Squibb, BMW, or BMY rather. I got to learn my alphabet. I'm sorry, guys. My ABCs, I forgot my ABCs. I'll be honest with you. But BMY, this one is up almost 4% today. And look at the performance of this stock over the past couple of weeks. Just from the end of November, it's gone from $53 to $65. We're talking about a over 20% move. We're talking about $11. So that is a very big move for BMY. We also have Altria, ticker symbol MO. Very, very great. Well, I don't want to say it's a great company per se, but it's a low-valued company. They pay a nice dividend, a great dividend. That's one thing I can say. And just in the past couple of weeks, since the end of November, this stock's gone from $42.50 to about $50.30 roughly, meaning the stock is up about 18%, which is very nice. This is a value play. You guys get the trend here, right? Intel's been ripping. Intel just today is up almost 3%, and it's been up about over the past couple of months. It is up about 15%. Cannot complain with 15% over the past couple of months. We have AT&T. AT&T just today is up 0.6%, and just in the past couple of weeks, it is up about 20%. And you guys can see energy stocks. We have XLE, which is an ETF that tracks energy, a bunch of energy companies. This has been ripping. And we have XLF, which is a financial ETF. This has been doing very well. A lot of the banks have been crushing it. Look, BAC, this reports earnings soon. We have JP Morgan. So a lot of the value plays have been doing well. The rotation is continuing. And the truth is, this could keep more pressure on these growth stocks in the short term. And trust me, guys, at some point, we are going to get a harsh reversal on these growth stocks to the point where they're going to come roaring back. That's going to happen. But at this point, it's just not happening. It's just not happening. The rotation out of growth is still clear. And I'll let you guys know when I first start seeing signs of a reversal, but we're not seeing that quite yet. And with that being said, guys, let's break down some stocks and let's talk about what happened today. First and foremost, we got to talk about some big tech names. So Apple was down to almost under 168 earlier today, so it double bottomed and broke out. So if you guys remember, like I said in the beginning of the video, the markets were way heavier in the red earlier. And at that point, big tech was also a lot lower, a lot deeper in the red. So we got the double bottom breakout on Apple, and it looks like it is going to close above $171. But with that being said, it is still being dominated by the bears on the 5-day chart. That's very obvious. Let's go to Google, G-O-O-G. Google's actually won that, and all you guys on my Patreon know this. You get all my moves. I bought more of earlier today. I bought more Google in the morning, and you guys can see in the morning it was down at $26.62, and it rallied almost $100 off of that low to end up closing the day at about $27.60. That's crazy, guys. Look, it almost ran up $100 intraday. So I bought that Google dip this morning. We had Meta, also known as Facebook, ticker symbol FV. This hit 315 this morning and then ended up rallying $12 intraday. We're talking about 4%. Very big move intraday for Facebook. Amazon did the same from 3,100 to 32. Now it's almost at 32.30. So it's rallied over $100 intraday, up over 3% intraday. And we have Microsoft most likely doing the same, guys. It's actually about to go green. That's crazy. Microsoft hit 304 this morning. Now it's trading at 313.20. It is up 3% intraday. And like I said, it went from being deeper into the red. Now we're only down 0.25%. It's about to go green. So big tech today. It got hit in the morning, but like the overall stock market, and since it is pretty much a good chunk of the overall stock market, it controls it, we're seeing a bounce back overall as these big tech names are bouncing back. And we got some interesting news today from Take-Two Interactive and Zynga. So these are video game oriented companies. Just to give you guys a little bit of a background, TTWO has games such as Grand Theft Auto, 2K, a bunch of other games, some mobile games as well, and Zynga is more dominating in terms of mobile gaming. So Take-Two today, Monday, announced it is going to acquire Zynga for $12.7 billion as it looks to expand its presence in the mobile gaming market. The deal values Zynga at $9.86 per share, a 64% premium over the stock's closing price on January 7th, which was this past Friday, I believe. And TTWO said it expects the acquisition to close in the first quarter of its 2023 fiscal year. And the key to the acquisition is mobile gaming, like I said a second ago, which has been Zynga's focus for years. The company is known for such titles as CSR Racing, Empires and Puzzles, and probably most of all, Words with Friends, while Take-Two's mobile franchise includes Dragon City, Monster Legends, WWE Supercard, and it is best known for its console franchises such as Grand Theft Auto, NBA 2K, and BioShock. And of course, there's a lot of other ones. So this is interesting because we have TTWO tanking on this news. This stock went down, I think at its lowest, it was down 16% maybe. It went down from, what was it, about $165 a share last week. I think it was in the 170s too. Now it's trading, it just hit a low of 138. That's crazy. So this stock's not liking the acquisition, but Zynga, since they were bought out at a premium, the stock went up like crazy. Today it's up 40%. It's going to close roughly up 40%, which is nuts. So in my opinion, the TTWO reaction, I've seen reactions like these all the time. Sometimes they continue to go lower over the coming weeks, which is possible. But I feel like there could be some sort of relief rally with TTWO, quite honestly, in the short term. So I'm going to put my alert right now at 100. Let's put it at 145. We'll watch it in the short term, and at that point, where could it go to the upside? I'm thinking 160 would be the next gap for it to fill between 155 160. So keep that in mind with TTWO. And for Zynga, be careful whenever a stock runs up 40% in a day. I gotta be honest, I'm careful with those. So be mindful of that. Now let's talk about some other ones. Applied Materials, AMAT. This one hit a low today of 143. Let me pull up the intraday, and you guys can see it rallied from 143 to now almost at 150 as the markets are about to close in 3 minutes from now. So heck of a recovery for Applied Materials and for the overall stock market. Now that we're talking about it, right? We already mentioned that earlier. And you guys can see now, if I pull up or if I clear this and draw this again, you guys can see AMAT is holding the uptrend right now, and we have a two pretty sizable upside targets that I'm looking at right now. You know, if we hold the uptrend, which again we are at about 145, 150, if we break 150 now, the next target I have, which is a big resistance stemming back from the beginning of November, is right around $160. So I'm going to put one alert here on AMAT at 151. We'll do that now, 151. And then if it goes from 151 to 158, which is possible, if we break that, this is probably going to fill the gap to 164, 165, which is, I believe, the all-time high. Let me double-check that and make sure it is, guys, for you all out there watching. I appreciate you guys, by the way. Make sure to hit the like button and subscribe if you are finding value in this video. So, yes, it does seem like that is the all-time high for AMAT. So watch out. I think this one could start building some steam here. Splunk is another one, SPLK, which, believe it or not, this went up today, guys. Splunk went up over 3%, and we're noticing on this 4-hour chart, it is breaking out of the 50 SMA, and it seems like we're going to start going up towards maybe 125, 130, which is right by the 180 SMA. So this one's gaining momentum. Ticker symbol SPLK. We have volume coming up. We have a bullish divergence as well on this 4-hour chart, which I'm liking. And if I pull up the yearly chart, you guys can see clearly 105, 110 has been support for a couple of months. And on the 3-year chart, you guys can see even more of that. Look at that. Back in 2019, 2020, 2021, we have not gotten under, other than the March 2020 crash, which brought a lot of crazy stock market price action, right? Other than that, Splunk has been above 100, 105 over the past couple of years. So at this point, we're already getting buyers at 100, 105. We're above 115, almost at 120, and there goes the markets, guys. We're almost at 120 now. I think Splunk's going to go back probably towards 130, 135 in the short term, maybe 140. So I'm going to be watching it, guys. I'm going to put my alert at about $120. And don't get me wrong. Listen, if the stock market, the volatility continues, if we do get another 5% drop on triple Q, 10%, you know, I heard some people saying there's 10% more downside coming, which they could be right. If we do get that, believe me, Splunk is going to go down more. from where it's gone down the past couple of weeks. But if the markets recover, we cool off a bit, this could be a nice play to go higher, in my personal opinion. So watch out for Splunk. Amgen is another one that is slowly but surely breaking out of the ascending triangle, or trying to at least. You guys can see a clear-cut ascending triangle on this 4-hour chart. Look at that. We have clear resistance at 230, but in the same breath, we've been making higher lows since the beginning of December, so we've dug ourselves deeper into this triangle. So in my opinion, this is setting up for a breakout. And where will Amgen go? What are some upwards target stocks for this stock if the ascending triangle breaks out? Well, I'm glad you asked, because I'm here to tell you, if we break 230, guys, this one has a big move, a big window. Okay, number one, we have 233. That is a spot worth looking at. But after that, we have a wide open window. I'm talking up to about 245, 250 on the stock. So if we get above, let's say 235, we'll say 235. If we get out of that point, there is going to be 15, 20 bucks more upside, in my opinion, on Amgen. And the reason why I'm saying 230 is because, again, the past couple of weeks, we've struggled at 230 and 233. If you guys take a look back in April and May, that is where we held support at 233. So that is another big now resistance, because we're trading under it. So we got to break 235, hence why I put my alert there. And if we do, this is probably going to go higher. So the next one I want to talk about is ADI. Let's pop it up. Analog Devices, Inc. This one is just clear-cut holding an uptrending channel, and it's towards the bottom of the channel, which means we might be able to buy the dip on this one if we do start seeing a reversal. As of now, like I said, we're at the bottom of the channel, and we're noticing a double bottom. Look at this. If I pull up the 20-day chart, you guys can see it does seem like a double bottom forming at about 165, but we haven't gotten the breakout yet. On this 20-day chart, we're clearly under both moving averages still. We're clearly seeing a death cross, so this needs to break, I would say, 175. So I'm going to put my alert at 175, right by the moving averages on this 20-day chart. If that point breaks, we might be seeing more upside there. So keep that in mind. ADI, 20-day chart. And again, back on the 4-hour chart, if we do break 175 into the 180s, this could go 190, 195, no problem, in my opinion. At least it's shown to do that over the past couple of times we've dipped. We've seen a nice recovery after, based on the past couple of months here of price action. So the next stock, the last stock, guys, is Cisco, CSCO. Cisco is one that we called out. I believe it was last week. It went down from 64 down to about 59. It lost close to 7% of its value. And we're noticing, even today, Cisco's up over 1%. We're noticing that, hey, buyers are stepping in. Buyers are stepping in above that 58, 59 level, above the moving average. And now we're back above 60. So we have to play this kind of as a continuation play. Maybe it goes back to about 64, maybe $65 per share. And now that I'm looking at the markets that we just closed about 4 minutes ago, guys, holy crap, NASDAQ 100 closed green. Are you serious? That is insane, guys. Look at this. Wow, it was down. How much was this thing down? It was like maybe close to 1.5% or something like that. Or actually, was it 2.5%? I forget. But overall, this recovered from 369 intraday low to about 380. That is, woo, wow, that is something crazy. That's why I always say relief rallies, guys. When we get oversold, very oversold like we did today, we get relief rallies. And today, we got one heck of a relief rally, to the point where Triple Q closed above 380, which was that level of support that I was talking to you guys about, 378, 380. That's a good sign overall. It's not it's not reversing to the upside completely quite yet, but we're seeing the nice breakout at close and a nice 380 close on triple Q, we're starting to see good signs here. Good signs. So that's it. I'm going to wrap it up here, guys. I hope you all found value. If you did, hit the like button, subscribe, drop me a comment, let me know your thoughts, and feel free to join my Patreon if you want all my buy, sells, call outs, morning update videos, more access to me throughout the day, plus more. All of that's on Patreon, link down below, or you can go to StockSurfest.com/Patreon. That's StockSurfest.com/Patreon. Make sure to also get your 2 stocks from Webull and your $50 from M1 Finance, link down below. And don't forget to also check out my videos from earlier. I'll pop them up here. I'll see you guys there. Thanks for watching. As always, keep crushing the markets. Stay safe out there. Peace out, guys.